You're very welcome to this series of pre-scene analysis videos related to CIMA's February 2019 pre-scene material. And the February 2019 management case study pre-scene is based on the fictional business of Crowncare, which is in the dental industry. So over the course of the coming videos, I'll be taking you through each page of the pre-scene document, discussing the main issues as they come up and trying to relate them to some of the key concepts you would have covered in your E2, P2 and F2 studies, as well as talking about the industry in general and likely exam issues. So let's take a look at the introductory section first. We're told that Crowncare is an unquoted company with 30 dental practices in Capital City and its surrounding towns. Capital City is the largest city in Varentia, and Capital City has a population of 2 million people. So we can say that this fictional city of Capital City is in line with other big European capitals such as Vienna, Paris, Bucharest, so among the very biggest cities in Europe. And we can also say, given the fact that Crowncare is an unquoted company, that is, they're not listed on the stock exchange, for example, in Varentia, that obviously there are pros and cons that come along with not being a listed business. So the pros would relate to Crowncare being able to take a little bit more of a long-term view. So they're not subject to the pressures of shareholders who are pushing for example, short-term profitability so that they can get a nice dividend payout at the end of the period. So they can take a little bit more of a longer-term view and take decisions in the interest of the long-term viability of their business. So less external pressure in general, and there isn't the same pressure in terms of regulations, etc., and the need to publish accounts and have them audited every period. There are cons, of course, with not being listed. The most obvious one, perhaps, is that obviously the company has less in the way of financing options. They really need to just rely on debt, perhaps, if they're looking to make a big investment or make an acquisition, for example. They can't really tap shareholders for equity funding. And they miss out as well on some of the reputational benefits that come with being a stock exchange listed business. It's quite common that analysts, etc., and shareholders, they view publicly listed companies a little bit more favorably. Perhaps there's a view that they have their house in order and that they're adhering to the rigors of the market as a publicly listed company. Okay, so Varentia, we are told very little really about Varentia other than what we're told in this opening section. It's a developed country. We know obviously it's a fictional country. The relatively high standard of living, we're told, in Varentia. The population is well educated and they're aware of the need to maintain good health. Moreover, unemployment is low and the Varentian government provides extensive healthcare to the population that's paid for through taxes. So, like a lot of the public health services that we see in Europe, for example, the NHS in the UK being a famous example. And the fact that this is a developed country with an educated population suggests that the consumers in this country have a good deal of spending power. On the other side, though, of this equation, we have probably higher wage costs for a company like Crowncare. Generally, though, the demand conditions certainly look to be quite favourable here. We're likely talking about consumers and patients with a degree of spending power, as I said before. They're well aware of the need to maintain good health, so that's good for Crowncare. You'll have a population that is aware of the importance of dental hygiene and trips to the dentist to take care of your teeth. The factor conditions are likely to be good as well. If you think about, the educated population, that's good for a company like Crowncare. They rely on well-educated dentists, etc. And we will discuss the rigorous qualifications that dentists in waiting need to obtain if they want to be dentists. So that is all obviously positive for a company like Crowncare. So those demand and factor conditions you would have come across in your E2 studies, Porter's Diamond, they look to be favourable. So it looks to be quite a positive market scenario for Crowncare at this early stage. So Varentia has the fictional currency for this fictional country, the V dollar. Now, there is no indication at any point in this pre-scene that Crowncare is selling into other markets or is even importing, for example, raw materials from other markets. It's not mentioned explicitly. So it's not likely to be a huge issue, differences in exchange rates between different currencies. So they're not going to have to hedge, for example, thinking of fluctuations in foreign currencies for foreign markets that they're dealing with. It's not going to be a huge issue for this business. It seems most of their dealings, or all of their dealings, are within Varentia. Companies within Varentia are expected to prepare financial statements in accordance with IFRS, again indicating that this is a developed country and that regulations are likely to be quite rigorous. So that is the introduction to Crowncare, its home market. Let's discuss your role within Crowncare. You're a financial manager and you work at the head office in Crowncare with a responsibility that is mostly related to management accounting. You report to the senior financial manager, who in turn reports to the finance director of the business. So, for those of you who have come through the operational case study, you might remember then that you were a lowly finance officer. So clearly you're rising. So congratulations on that. As a financial manager, you are going to have more responsibility and the nature of your role will change compared to what you encountered at the operational case study. So, as a financial manager, the following would be particularly important in relation to your role. You're going to be monitoring the implementation of strategy by those who are running the company. Remember, as a finance officer at the operational case study level, it was more about executing the day-to-day tasks with a short-term focus. Well, the financial manager is actually now managing those people who execute the day-to-day tasks. So you're overseeing more than you were before. And the nature of your focus will actually stretch a little to cover the midterm. You're not taking a short-term focus, rather you're taking a midterm focus. You're talking about decisions and recommendations that would have an impact over perhaps a 1 to 3 year time horizon. So you're going to be looking at the investments, recommending on the kinds of investments the company should make, the prices that are being set, the services and products that might be offered over that time horizon. Of course, you'll be dealing with risk as well, which you would have covered in your P2 studies. You'd have to make recommendations on how to classify risk, how to consider it, and how to put in place some mitigation strategies to deal with different risks. You'll be recommending on longer term financing to cover the investments that you're recommending, etc. And you're going to be dealing with more advanced financial reporting. We'll see when we look at the financial statements of Crowncare, for example, that we're talking about consolidation. This company has a number of subsidiaries in its home country, and that complicates a little bit the financial reporting. As a manager, you will be dealing with people who are higher up the food chain. You're going to be dealing with senior managers, directors, etc. And you'll be expected to influence top management. So you'll be expected to make compelling arguments, make recommendations that influence those senior people. And in general, you'll be expected to take a wider view of your business and the environment within which it works. So you need to consider your competition, the wider economy, stakeholders such as the government, regulators, etc., the wider public, and the impact that the decisions the company takes has on those stakeholders. Over the course of the next 2 pages, we're presented with this introduction to the field of dentistry. So, dentistry, we're told, is a branch of medicine that's dedicated to the prevention and treatment of damaged and diseased teeth and gums. The root cause of the diseased teeth and gums comes in the form of bacteria, which cause decay in the teeth, and it causes gum disease as well. So the fact that dentists are going to be involved in prevention and treatment, it's interesting to note that they're very active, for example, Crowncare, in prevention, so regular checkups, advice on hygiene, etc. And that actually kind of cannibalizes the revenues that dentists can earn from treatment. Treatment occurs when the damage has already been done and it's necessary to extract teeth or to opt for fillings, etc. And obviously that is a handsome source of revenue for dentists. But more and more, as the population becomes a little bit more savvy in terms of caring for their teeth, using toothpaste, flossing regularly, etc., taking preventative measures themselves, that obviously is an impact on dentists being able to make money from later treatments. But what's happening is dentists are taking more of a proactive role, getting their patients in for regular checkups, which are often covered by insurance, which we'll look at later. And this preventative treatment is actually quick and quite cheap for dentists to do. So actually it turns out to be quite a cash cow for dentists, and we look at that in more detail as we work through this pre-scene. The treatments are more expensive and dentists can charge more, and whereas at the prevention stage there are actually substitutes to going to the dentist. So you can floss, if you floss and brush regularly, you can actually avoid having to go to the dentist so much, so that represents a substitute. At the level of treatment, there is still no substitute for the dentist. If you need your tooth removed or you need some elaborate treatment in the form of bridges, false teeth, etc., you really have no alternative but to go to the dentist. So for children, they have 20 teeth when they set in between 6 months and 3 years, and as adult, 32 teeth. And we're told later on that children's treatment and the prevention methods employed by dentists are covered by the National Health Service of Varentia. It's only when they pass 16 that they actually need to pay for treatment themselves or take insurance to pay for treatment themselves, or they can opt for a very, very basic coverage with the VHS, which is the Varentia Health Service, and we'll talk about that later on. So we're told here about the makeup of a tooth. There is a hard outer layer of enamel, then there's a soft inner core of dentine, and then you have the sensitive inner pulp containing blood vessels and nerves. And the root canal carries nerves and blood vessels into the body. So here we have a nice illustration. The enamel at the top being hard, you don't want that to be broken through because you have quite a soft dentine interior. And once a cavity forms and it breaks through the enamel, the dentine is actually penetrated very easily. So it's then only a short way to the pulp and those sensitive nerves. And for anyone who's suffered from toothache, it's when the dentine is broken through and the pulp and nerves get stimulated, and it is awful. And it'll send you running to the dentist. And this, I think, is interesting from a price elasticity of demand perspective. Remember, you would have come across that in your P2 studies. It is the extent to which demand is affected by a rise in price. So if there is high elasticity of demand, a slight increase in prices would actually see a big drop in demand. But I actually think that in this industry, if you're talking about patients suffering from toothache, which is very, very uncomfortable indeed, it's actually going to affect the price elasticity of demand. Imagine you have a toothache that is simply intolerable. It's going to mean that you're probably much more likely to hand over any sum for a dentist to actually treat it. And this, I think, plays into the generally high prices that you see dentists charge. There are a number of, I think, factors that influence the high prices in dentistry, and I think that's actually one of them. So, moving on. Bacteria, which we talked about as the root cause for a lot of gum disease and problems with teeth, reacts in the mouth with food to create acid, and it's the acid that erodes the hard enamel to cause cavities. They are the small holes that actually form. They're sometimes called caries, and that's where the problems start. Acid erodes the dentine, which is the softer inner feature, and that it erodes it very, very quickly once the hard enamel has been penetrated. And then it's a short step to the pulp, and the nerves get stimulated, and that causes toothache. Obviously, it's kind of in dentists' interests for this to happen, but it's less and less common as people take preventative measures themselves by flossing more, by using fluoride toothpaste, etc. Later on in the pre-scene, we'll be told that actually, apart from all of the advances in dentistry, the profession, dentists themselves actually regard fluoride toothpaste as perhaps the greatest recent achievement in the field of dentistry. And patients themselves are taking those preventative measures to avoid having to go to the dentist later on for treatment. So bacteria can accumulate in the gums, we're told. Food can work its way into the gum line. Then infections can arise, and that can actually lead to loss of teeth. So we're going to discuss some of the substitutes to actually visiting the dentists here in the form of brushing teeth regularly. The abrasive action of brushing regularly removes plaque buildup that's created by bacteria. Toothpaste is alkaline, which actually neutralizes the acid that forms in the mouth with bacteria interacting with food to cause acid. Toothpaste also contains fluoride, which is antibacterial and can actually repair the hard enamel if small cavities, etc., start to develop. And as well as that, brushing stimulates blood flow, which is good for the gums and removes food and bacteria as well. So these are the substitute goods to actually visiting your dentist: brushing and flossing. So I do think also at this early stage we could mention an ancillary revenue opportunity. Could it be that dentists could recommend certain brands of toothpaste and actually receive a small fee for those recommendations? I certainly think that's something that they could think of for some ancillary revenues. It's not mentioned elsewhere in the pre-scene, but I think it's certainly an idea. Okay, wear and tear is also a cause of problems for people. People are living longer in generally, and certainly in developed countries such as Varentia, we're seeing an aging population. And it's just, one of these facts that things break down as we get older. Our bodies fail us in different ways. The fact is that the human jaw exerts a great deal of pressure, and that can lead to breakage and problems, as well as foods containing hard items such as seeds, etc., also increase the risk of tooth breakage. So that sends people as running as well to the dentists. So the fact that there is an aging population in a country like Varentia obviously is another positive demand condition for a company like Crowncare. So dentistry, we're told, generally focuses on prevention, and that prevention comes in the form of regular checkups to identify problems before they become more seriously. Later we'll be told that insurance companies actually obligate their clients, people who take on private insurance, to go to a number of checkups every year to take these preventative measures themselves to avoid more expensive later treatments. So that is obviously a big positive for dentists. If their insured patients are being obligated to go along. That's a nice form, a constant stream of revenue in the form of quick checkups for dentists. As well as that, as well as the checkups, they're offering advice on oral hygiene, etc. And they're seeing more and more patients present to take on treatments with a cosmetic aspect, such as teeth whitening, etc. So that is representing an upsell opportunity for dentists nowadays, as people take better and better care of their teeth, and there's less and less of a need for treatments, etc. Dentists are having to get a little bit more creative, and one of the ways they're doing so is upselling cosmetic treatments, teeth whitening, braces, etc. And the most expensive treatments are mentioned in this last paragraph in the form of false teeth, removable dentures, bridges, and more recent developments in the form of implants. They are the most expensive treatments offered by dentists, the most complex, and they're generally not covered by insurance. Generally, the patient actually has to pay for them himself or herself, and we'll see those treatments in a little bit more detail later in the pre-scene. Let's take a look at Crowncare's history. It has staying power, given the fact that it has been around for a very long time, since 1947, when it was founded by two dentists, Ben Wynn and Tom O'Malley. They established a surgery in the Eston suburb of Capital City, and it was right around then that the VHS was formed, the Varangian Health Service. And the idea with the VHS was to introduce free healthcare funded through taxation. I think that this is a slightly curious way to express this free healthcare, given the fact that in the same sentence they mentioned that it's actually funded by taxation. So it's not actually free. It's that the inhabitants of a country are actually paying a little bit of their taxation towards the upkeep of the health service. Okay, so the VHS is going to be a key player in this industry. They're going to have high power and a high level of interest, according to Mendelow's matrix. So we're not talking about a completely free market. We're talking about a marketplace in which the government plays a key role. And there's always going to be a little bit of tension, perhaps, between private and non-private players in this kind of market, because their motivations are different. As a private enterprise, Crowncare is going to be primarily concerned with profitability and generating wealth for their shareholders, whereas the VHS is going to have a different set of targets that probably relate to maybe the 3 E's of economy, efficiency, and effectiveness, and providing the maximum benefit to the beneficiaries of the country. So watch out for tensions between the VHS and private players like Crowncare. And it's not going to take long before we actually see the first tensions arise. Later in this page, there is mention of it. Okay, Varangian dental practices have always been commercial businesses. So private versus public. And the dentists are private practices. So think here of your CIMA code of ethics. There could be ethical issues popping up, perhaps related to putting more of an emphasis on profit at the expense of fair treatment of patients, so profit over people. That is going to be maybe a little bit of concern, but really, there don't seem to be many indications of that kind of thing occurring. Dentists are quite well regulated by their own body, for example, given the fact as well that the government is taking a big interest in this marketplace. Abuses are going to be quickly clamped down on, perhaps, but it's just something to keep an eye out for. Crowncare grew steadily, we're told, over the first years of its existence. They were fixated on offering high quality care, and they soon built up an excellent reputation. And it seems that they have maintained that emphasis on high quality up to the present day, and they still enjoy an excellent reputation. By 1955, just 8 years into their existence, they had opened a second surgery in another suburb by the name of Handel in capital city. In 1980, they moved away from being a partnership and actually incorporated the company as a limited company. So they had 11 partners and 7 surgeries by 1980. So incorporating the company as a limited company has a number of advantages, but there are some cons as well. So as a limited company, the chief advantage is that you have limited liability for the owners of the business. So these 11 partners would find that their personal assets, for example, could not be seized if the company were to fold and they still had debt obligations and obligations to their suppliers, for example. So that is obviously a big benefit. On the other side, though, there is less privacy for a limited company. You need to publish your accounts. They're publicly available. There's a little bit more paperwork. So in general, you could have, your competitors casting an eye over your financial statements and getting an insight into what makes your business tick. By 1990, 10 years later, many dentists were actually becoming unhappy with the VHS. So, as I said before, you want to watch out for tensions between the public and private players in this industry, and already we can see these tensions arise. And the reason that dentists became unhappy with the VHS was because dentistry had grown in sophistication, so there were more advanced treatments, etc., being offered by dentists, and what was happening was the VHS was limiting dentists to more basic forms of treatment. And as a result, dentists were actually forced to ask their patients to pay up for these more advanced treatments and to pay the difference between the cost of these advanced treatments and what the VHS would actually cover them for. So limited treatments were only available on the VHS. And for example, they mention cavities here, which can be filled using mercury amalgam or translucent polymer resin. And translucent polymer resin is a more advanced method, and it means that the fillings are not visible, but with mercury amalgam, there is quite an ugly silver filling. It's a more basic treatment, and dentists prefer to offer their patients the translucent polymer resin. The problem is, though, it's a little bit more expensive, and as a result, the VHS is not willing to cover it. So the VHS is only willing, it seems nowadays, to cover very basic treatments because it would just be too expensive to cover all of these advanced treatments, and it would mean a rise in taxes. So remember what I said earlier on. There's discussion of the VHS being free, offering free healthcare. Well, it turns out it's not free after all. The VHS is sticking to the most basic treatments because to pay for more complex treatments on behalf of the patient would mean higher taxes. So people would be hit in their pocket, the general population would be. So, as I said before, the health service is not free after all. There is a cost to maintaining it. So, public-private tension, we're seeing it. It's been in place for a very long time, and it is a hallmark of this industry. In 1990, as a result of this tension, Crowncare started to promote private dental insurance. And with private dental insurance, patients pay a monthly premium, and that actually gives them, it entitles them to 4 hygienist appointments and 2 checkups every year. And most treatment under an insurance policy like this, a dental insurance policy, is covered. There are not many restrictions. It's only the more advanced treatments that are not covered, meaning that the patient would actually need to pay for those himself or herself. So the benefit of these regular checkups is, first of all, that they are cheap for the dentist to do. They're quick, they're not complex, and often there is nothing to be done at all. So very, very quick, and a nice little earner for the dentist because they're covered under the insurance policy. They can bill the insurer for these treatments. And for the patient, obviously they're quick treatments. They're not painful or inconvenient. And it avoids bigger problems occurring down the road. By 1995, we're told that Crowncare had stopped accepting new VHS patients entirely. And it turns out that this is more and more the case nowadays. Fewer and fewer dentists are actually accepting VHS patients due to the limitations imposed on private dentists by the Varangian Health Service. And I do think there's an opportunity there for lower cost dental clinics to come along and offer people who are not being served by private dentists, and they can't afford to pay for private dentists, to come along and treat those people. So maybe there's a low cost dental provider that wants to come into the Varangian market and tackle that gap in the market. The company, it continued to grow, and the way it has grown is through acquisition of other dental practices. Presently, it owns 30 practices, and that actually makes it by far the biggest dental provider in capital city. And the way it manages these dental practices is they are listed as wholly owned subsidiary companies of the Crowncare Group. So remember what I said before, more complex financial reporting requirements. At this level, we will have consolidated financial reports. So the employees at the company, there are 105 dentists, 40 of those own shares in the business. Also, the company employs 110 dental nurses, 96 hygienists, and 60 reception and administrative staff. All of that added up gives us 371 employees. If you divide that by 30 practices, that translates to about 12 staff per clinic. So under the UK definition as to what constitutes a small to medium-sized enterprise, you're talking about businesses with under 250 staff, with revenues of about under 25 to 50 million British pounds in revenue. And that means that the Crowncare Group is actually quite a large business. It's not a massive multinational company or anything like that, but it is not, under the UK definition, a small to medium-sized enterprise. And we'll see when we look at their financial statements, revenues are about 111 V dollars. We don't know, of course, the exchange rate between the sterling and the V dollar, but if we were to assume that it's close enough to 1-to-1, then obviously it means that this company is far in excess of the UK definition of a small to medium-sized enterprise. So quite a big business. A word on the ownership. 40 main shareholders, they're all dentists. The fact that the shareholders of the business are also the people who run the business on a day-to-day basis means that we're not going to be dealing with the agency problem. The agency problem refers to a scenario where the interests of the owners of the business and the people who run the business on a day-to-day basis are not aligned. So you might have managers running the business acting in their own self-interests over the short term at a cost to the shareholders who are the owners of the business. In this case, the people who run the business and the people who own the business are one and the same. So their interests are obviously very aligned. Okay, 5,250 registered patients at each of Crowncare's practices. So that means that the company is serving about 150,000 plus patients overall out of a 2 million population in capital city. And if you break that 2 million population into different catchment areas, divided by, for example, the 30 clinics run by Crowncare, if you were to assume that each clinic is present in a different catchment area, that means there are about 66,700 people per catchment area. And given the numbers that Crowncare is serving with 5,250 registered patients, for example, per catchment area, that means they've got an 8% market share per catchment area. So that's quite good, but there is room to maneuver perhaps. These catchment areas, the location obviously of each dental clinic is important because it is primarily what is driving registration with different dentists. People are more likely to register with a dentist that is close to where they live. So I would say it's the key determining factor for most patients, because brand loyalty is not really going to be very, very high with dentists. What they offer, it's kind of a commodity. You can get that service. It's much the same regardless of the dentist. And as a result, brand loyalty is not likely to be very, very high. People aren't going to enjoy going to the dentist. It is a painful procedure. So other factors are going to determine what the demand for dental services, and certainly location is going to be a very, very important one. So over the next couple of pages, we're going to look at the different occupations that make up the dentist practices, starting with dentists and dental nurses. They conduct half-yearly checkups. There's a reason for doing these checkups every 6 months. It's because cavities roughly take 6 months to develop. So in this way, if you see a patient every 6 months, you will detect problems before they become serious. So you're incurring a cost and a check now to avoid longer term, bigger costs and problems. So that reminds us of your P2 studies, costs of quality. The idea is that you have prevention and appraisal occurring at this earlier stage. So prevention would often take place with the patient himself or herself taking measures such as flossing and brushing a couple of times a day. And the appraisal then comes in the form of these checkups being done by dentists every 6 months. If damage to the tooth is extensive, there could be some kind of more advanced treatment needed, such as the fitting of an artificial crown, or as a last resort, the dentist might actually have to extract a tooth or teeth, and sometimes then would recommend the placement of false teeth or implants to replace these removed teeth. And the dental nurses are then assisting dentists. Okay, next up we have the hygienists, and they advise patients on oral hygiene, and there are regular preventative treatments in the form of brushing and flossing. As I said before, those are substitutes to alternatives to trips to the dentist. But what we see here is dentists are trying to monetize the threat from substitutes by offering these interventions and advising people on the steps they can take to avoid future trips to the dentist, for example. One of the ways that they try to monetize these trips to the dentist for preventative measures by the hygienists is the hygienist can scrape away dental plaque. So that's kind of a way to justify billing the patients rather than just sitting them in a chair and saying, you need to brush your teeth, you need to floss. Well, everyone knows that nowadays, so they need to go a little bit beyond that if they're to justify charging the patient. Next up, we have a couple of specialists. Endodontists are specialists who treat problems that affect the root canal. So the root canal protects some of the nerves under the dentine and carries them into the body, the channel inside the tooth that carries blood and nerves. And of course, if the nerves are stimulated, it leads to a lot of pain. If there's infections, it's extreme pain. And the body's immune system cannot actually deal with infections of the root canal. So very, very serious, very, very painful. There's no alternative here but to visit the dentist and be seen by an endodontist. So the supply of endodontists is not likely to be very high given their specialist skills. Their wages are going to be high. And again, that means that the price for the end patient is likely to be high when you're paying for treatment by endodontists. So it can involve root canal surgery, cleaning out infections and filling the root canal to prevent any recurrence. More difficult cases are handled by endodontists, but dentists will actually carry out more simple procedures themselves. Another specialist here, orthodontists. They are involved in the straightening of teeth. In other words, they're involved in fixing braces. And simpler cases, again, can be handled by dentists. More complex cases handled by their colleagues. And again, these people are likely to have specialist skills, and as a result, their wages are going to be a little bit higher. Next up, we have dental technicians, and these people are actually working in third-party labs, and these labs manufacture bespoke items to dentist specifications in the form of crowns that need to be fitted. The dentist will provide a detailed model that is actually tailored to the individual patient's needs, and then the technician will manufacture this in their laboratory, making sure it's exactly the right shape for that particular patient, exactly the right color so that it actually blends in with their other teeth. They will develop dentures, implants, bridges, braces, all to the dentist's specifications. So these dental technicians are not working in Crowncare themselves. They're working in third-party laboratories. I do think there's an opportunity for a company, a big company like Crowncare, to actually consider vertically integrating one of these labs, because the work that these labs do for Crowncare is actually quite costly. We'll see later on some budget information, and it turns out that the amount they're being charged is not insignificant by these dental labs. So if they were to actually vertically integrate these labs, they could drive down the price of producing these items. Also consider that these laboratories are serving 30 of Crowncare's dental practices. If you were talking about a dental business that had one or two practices, then it wouldn't really be economical to go out and buy a lab. But because we're talking about a big company like Crowncare, one lab could serve all of their 30 clinics, and it would actually result perhaps in significant cost savings. Next up, we have receptionists, administrators, and managers. So reception staff organize patient appointments, they bill for treatment and order consumables that are going to be used in dental surgery. And larger practices have a practice manager overseeing the non-dental elements that go with running a practice. So non-clinical matters related to the business side of running the practice.